huge headline numbers. What stands out to you?
I don't think when you think just when you think it couldn't get any worse, it just does, right? And of course, we were kind of expecting them to be in line with guidance. Of course, that is a big disappointment that they are losing subscribers now and again, the 2Q guidance. So this is really bad news for the stock, and I think it's again going to lead to a whole recalibration, a whole resetting of expectations for the Netflix story.
Hey, Geeta, Carol here, and I was looking at some of the reading in on the preview of the earnings, and Bloomberg Intelligence said that download data suggested subscriber gains of 4 million, so even above the 2.5 million that the street was expecting. Is that why we're also seeing such a big drop in the share price? Because even out there in the universe that they were expecting a more aggressive number from Netflix.
Yes, I think so. So I think coming into the quarter, we were obviously looking at download data. Guidance was, as you know, Carol, very, very weak, but we were looking at download data, which did hold up pretty decently versus, last period, 1Q of 2021. And so that kind of gave us some confidence. But then there were a lot of these headwinds that were kind of clouding the outlook. So the geopolitical turmoil, the Russia, no one really knew how many subscribers were there, but it looks like it was about 2.5 million probably, which kind of impacted that subscriber number. And then, of course, you have the price increase, and that was always, going to be a big wild card as well.
I'm curious, they talk about here the idea of trying to boost viewership overseas, that could be a growth story for them. But when you look at the numbers for Latin America, you look at the numbers for the Asia-Pacific region and some of those emerging markets here, I don't see that growth just yet. What is going to be the catalyst, if anything, that would actually get them to some meaningful growth in those markets?
I think now it's really going to come down, Romaine, to price. So we've seen Netflix has been able to grow to about 220 million subscribers worldwide. But I think all the low-hanging fruit at this point has been captured. We really are not seeing any catalyst. So I think at this point, they do talk about password sharing, and they talk about 30% of U.S. households sharing accounts. So potentially kind of hinting that they're probably going to crack down in that in the developed markets. But I think in the emerging countries, especially Asia Pac and LATAM, I think what they're going to really have to do is introduce that ad tier to lower prices and to attract a wider customer base.
Well, that's where I was going to go next here. Why have they been so resistant to embrace that? Something people, some investors at least, have been calling for now for quite some time.
Yeah, they've always kind of wanted to keep this, a pure subscription story, stay away from advertising, stay away from data privacy. But I think now, just kind of seeing the whole subscriber story, just a dramatic slowdown here, as well as Disney Plus kind of finally conceding that the mighty Disney is also introducing an ad tier to get to that target of 250 million subscribers by fiscal 2024. That tells us, something. Advertising is inevitable. You're going to have to do it not just to acquire new subscribers, maybe even to retain your existing subscribers, especially as you have all these inflationary pressures building.
Hey, Geeta, you mentioned Disney Plus. Disney shares lower, as are Roku shares and After Hours now as a result of these. It's fair to say Netflix totally invented a category years ago when it came to on-demand streaming as a subscription. The company says, though, over the last 3 years, as traditional entertainment companies realize streaming is the future, many new streaming services have also launched. The company calling this out as a third reason for the headwinds for the current quarter. I'm wondering how much of this is about competition, about those traditional broadcast companies, about those traditional entertainment companies finally figuring out streaming.
Oh, absolutely. It has a lot to do with competition. We're seeing them obviously Netflix has a huge advantage. They've been the first to the game. They do have that first mover advantage, but you have everybody now making a bigger and bigger push. And we've seen now the streaming wars almost evolve into these spending wars. If you look at Disney, they're spending $33 billion on content this year. You look at Warner Brothers Discovery, the new media powerhouse, they're spending about $20 billion of content. So all of these companies chasing streaming subscribers in a big, big way. Of course, Netflix itself is spending about $18 billion. But really, to all of that low-hanging fruit, especially for Netflix, seems to have been captured. And so to get that incremental subscriber, they're going to have to spend a lot of money. And competition has been a very, very big factor, especially as you see some of the tech giants kind of get in a much bigger way. And, Amazon Prime obviously being the prime example there with their MGM buy, as well as, kind of getting into sports in a much more aggressive way.
Geeta, the thing is that Netflix is losing customers in 3 out of 4 of its regions.
locations, including 600,000 in the U.S. and Canada. Forget emerging markets. In the U.S. and Canada, we're also losing customers here for Netflix. So what is that really attributed to? Is it the prices? Is it the inflation that we're seeing elsewhere? Where are we seeing issues with the core customer base?
I think with the U.S. and Canada, and this is what most investors were really fearing, was the price increase. So we did have a substantial price increase from about $14 to $15.50 that went into effect in the first quarter. And everybody was kind of fearing that, typically people haven't been that price sensitive and churn has been fairly low. Netflix has been able to pass on those price increases fairly successfully. But I think this time around, the environment is different. The situation is different. You have this whole inflationary situation going on, and I think people have just kind of had enough. And especially when you have so many of the other streaming alternatives out there that are so much more cheaper, then it kind of really begs the question about whether you really need all those services and pricier and pricier services.